Now, the release of local consumer inflation figures has been one of the main focal points for the day's trading. Annual consumer price inflation was 3.8% in September, down from 4.4% in August, coming in well below the 4.5% level the central bank aims for. Investec's chief economist, Annabel Bishop, joins us now to unpack that print. Thank you so much for your time, Annabel. Quite a pleasing picture there that we are seeing the inflation figure for September getting closer to the lower end of that target range and well below the 4.5% midpoint. Even more pleasing than we saw in August. Did you expect such a big softening of the consumer prices in September?
Yes, hi. Look, I think, the governor recently said that the next three prints are going to be a three handle, and he seems to have been spot on because, putting today's figure into our model, it does show the next two after this will also start with a three as well. We did expect to see inflation fall quite substantially, obviously dropping from 4.4%, and we thought it would come out around the 4% mark. So, of course, coming out at 3.8 is wonderful. I think, the consensus expectation was for 3.8 as well. And, of course, as we approach the release date, more and more data came in supporting this.
Annabel, just looking, for example, because food also remains a focal point, of course, as consumers are still battling with a cost of living crisis. So quite an important one there for households. Talk to me about some of the trends that you have seen there, if there are any worrying, lingering trends in that food basket.
We're quite beholden on what happens internationally. And of course, we did see some quite substantial price pressures come through from the international component, which of course is priced in US dollars. That rose by about close to 6%. But of course, the rand strengthened by about 2.5%. So overall, we had a smaller feed through that did see food price inflation jump up by 0.6% on the month. So that was noticeable. Luckily, we had a base effect from a year ago, which suppressed that. Of course, that meant food price inflation remained unchanged at 4.7. Looking forwards, much will depend on geopolitical tensions around the world. We, of course, saw an intensification of the Russian-Ukraine war, which obviously placed some pressure on food prices internationally, as we said in October. And, of course, as well, we also saw the Middle East conflict broaden as well, which caused some concern around oil. But looking forwards, domestically, we're not seeing anything of great concern, but I think we need to bear in mind as well that a lot depends on the rand, but of course a lot also depends on weather conditions. So both of those, of course, feed through into the commodity prices, but we're not overly concerned about the rest of the year. We think inflation could remain below 4% until December.
Of course, what we, look forward to now is the South African Reserve Bank's next interest rate decision, its next MPC meeting. Considering the big softness in the print from August to September, I'm wondering, Annabel, should this not create a longer runway for the SARB to actually decrease interest rates by 50 basis points?
So I think, that's the point that's going to be up for discussion. And, we definitely expect an interest rate cut. We definitely think there'll be a 25 basis point cut in November. Interestingly, at the same time, our Reserve Bank governor has been talking quite heavily about reducing the inflation target. And, reading through his latest speech, he indicated, towards the 3% mark. And as we know, they shifted from targeting a band of 3 to 6% to 4.5% a few years ago. And I think the time appears to be ripe, certainly from what the governor is saying, in their thinking, to perhaps look at a lower inflation target once again. Of course, if we do see that announced at the MTBPS next week, our mini budget, and of course National Treasury sets the target, and the Reserve Bank's responsible for achieving it, then if we do go for a 3% target, there'll be less room to cut interest rates in the near term, and of course in the medium term as well over the next couple of years. So, we certainly expect a 25 basis point cut. I'm not sure if they'll deliver a 50 basis point cut yet. As I said, much will depend if the inflation target's lowered, but also, of course, the risks are to the upside with the geopolitical tensions we've seen. And, the rand hasn't strengthened very much this month because of the cautious tone that the Fed has taken on their interest rate cut cycle. So at the moment, we're still sticking with our 25 basis point cut.
Are there any maybe movements from the Fed that could influence the SARB at this point going forward, Annabel?
Yes, so of course we have two more interest rate moves from the Fed due this year, and only one from South Africa. The Fed is expected to cut by 25 basis points at each of those meetings, giving us a 50 basis point lift, a drop from the Fed and only 25 from South Africa, which means there'll be a lift in the interest rate differential, which of course will support the rand. And, from that perspective, we're actually going to find ourselves in a situation towards the end of the year where the rand could see quite significant strength. So I think, that's really the number of factors that markets are looking at now. Do we see a drop in the inflation target? Do we perhaps see a bigger cut than 25 basis points at these Fed meetings? And how much does the rand strengthen? And of course, all that's really going to feed through into the interest rate outlook.
All right. Well, thank you so much for your time and for your insights there on what we saw on the inflation front. Annabel, that was Annabel Bishop, Chief Economist at Investec.